Well, good morning, everyone. It's Dan Basse and Ben Buckner here on the last day of July, 31st of July, Thursday. We had export sales this morning. We're heading into those August 1st tariff levels. The U.S. Appeals Court today will hear in Washington, D.C., whether or not Trump tariffs are legal or not, or whether or not it needs to be pushed to the Supreme Court. So a big day for U.S. President Trump in terms of the legality of U.S. tariffs. So, Ben, with that, I'll turn it over to you. Corn, soybean, and wheat futures are all kind of slightly lower this morning. Just looking for direction here. The wheat market trying to find a bottom on stable Black Sea prices. But what do you got for us?
Fundamentally, it seems pretty dull, and weather certainly has gotten pretty tedious. I'd say it still looks pretty good for the next 10 or even 15 days. But what jumped out to me, at least last night and this morning, was just kind of how pleasant the temperature pattern is going to be, at least for the next 5 days and probably the next 10 days. So this graphic show on the left, you've got the maximum temperature for the central U.S. for the next 5 days. You can see that for the most part, temperatures will be in the 70s. So it's kind of a dramatic cool down, and it happened very quickly. On the right, you've got the lowest temperature expected for the next 5 days, and you've got a lot of readings in the 50s and 60s. So what was concern over, overnight lows being too high for too long, and we've still got corn left to pollinate, soybeans left to reproduce. I think those concerns are probably gone now, at least given the details of the 10-day U.S. Temperature forecast. Lows in the 60s. Probably into the 9th or 10th of August. So that is new, and I think it leans kind of bearish given we're still trying to determine how big is big in terms of crop sizes. And then it's export sales, kind of the only new real fundamental indicator we've got this morning. As we're hearing about trade deals and concerned about the August 1st deadline, we've got nothing concrete. And this is not insightful. This happens really all the time, every year at about this time of year. Old crop U.S. corn export sales were the highlight, I think, of the 24-25 crop year in the major grains, kind of coming to an end, and that is typical kind of after the middle of July. But now we're just selling 20 million bushels per week, and I imagine this drops to zero or negative as importers roll their old crop commitments to new crop. So I think we are seeing less disappearance in the physical export market for corn, at least for the next 60 days, and that collides with, of course, something we've highlighted, and that's that pretty rapid southern and Gulf corn harvest. New crop export demand for corn, though, is still pretty well intact. I think, if we look at old crop carryover sales along with new crop sales, commitments are 785 million bushels. It doesn't tell you much about what happens in the end, but I do think we can say that importers are buying corn from the U.S. for new crop delivery. But it's the soybean market, I think that's the biggest concern. And I think why you've seen an acceleration in the extraction of premium in the soy market this week. So we can all see and feel crop conditions, yield model-based forecasts, and of course this favorable early August weather pattern in the central U.S., but it's demand. So we're kind of shifting our gears at AgResource to how do we clear these new crops when they are harvested in October and November. I think it's going to be challenging, especially in the soy market. So if we add together outstanding old crop soybean export sales along with what's actually been sold for new crop delivery, it's 252 million bushels, up slightly from last year. But if we only isolate what has actually been sold specifically for the 25-26 crop year, it's only 111 million bushels. And that's the lowest in a couple of decades. So China's not buying U.S. soybeans. Dan, you have highlighted they are buying from South America for as late as October. So the concern is that you really do trim your new crop U.S. soybean export number, and that eclipses pretty easy anything you gain in crush capacity. So it is all about export demand for the soy market longer term to us. And the wheat sales pace, though, is pretty good. I think what we've highlighted already this week is confirmed, and it's a fact that the wheat market at these prices is finding forward demand from traditional buyers today, but it is finding better consumption levels. So it's kind of hard for us to be long-term fundamentally bearish of wheat. Total sales already account for 41% of the USDA's forecast. 351 million bushels is up 15% on last year. Hard red sales, we sold another 7 million bushel of hard red wheat, the cheapest of the U.S. origins. Commitments are now 134 million bushels, or about 50% of the USDA's forecast, and we're only 8 weeks into the crop year. So a lot of time to go. I think the USDA on paper has room to raise their U.S. wheat export forecast, 20 or 30 million bushels. Kind of lastly, as we think about trade deals and what China does, and we would really like an ag-specific deal secured, no later than this autumn. But just wanted to step back, and we kind of talked about, Chinese purchasing power being diminished because of currency there. And then just looking, let us ignore the trade war and just take a look at the fundamentals of China's agricultural market. And it seems a little anemic to us. The hog market has done nothing for the last 10 months. We've even shrugged off in that market, what's usually pretty strong seasonal bullish trends in July, and that's just fitting more completely. Import margins on corn, I think, are getting smaller. They're not getting larger. And so it doesn't seem like there's any large Chinese imports of foodstuff, and that market seems pretty balanced to us. So that kind of lingers in the background as we do start to focus more on Chinese negotiations and so on. So not much new in the end. Weather looks good. Trade deals, not a positive yet. And that's why we're pricing markets where we are.
I think that's right, Ben. And the cash basis levels, we're now shifting over to August basis, and they're all coming down here. Corn basis levels, bean basis levels, all sinking, largely due because, as you've been pointing out, the increase in Delta and Gulf State harvest progress. So I think this will continue. Markets, at least at the moment, don't make bottoms in the month of July or early August. They tend to do so maybe later in August or September. We'll watch that carefully, but I still think it's all about how big is big in terms of the crop size and getting beyond the USDA crop report on the 12th and then getting in the crop tours thereafter. So any final closing comments, Ben?
Yeah, that's all correct. Yeah, physical supplies will be getting bigger. That's kind of the beginning and end of the outlook for the next month or so.
Yep, I think that's the key. Well, everybody have a good day, good trading day on Thursday. We'll be back tomorrow to finish the week out. Important is that September corn is now below the gap area. We'll see if we close there on Friday and then what it means for next week. Have a good trading day, everyone.
Bye-bye.